All right, let's talk about that moment. You know the one, that feeling you get when you're sure the market is just messing with you. You spot what looks like a perfect reversal, you get into the trade, and then you just have to sit there and watch as it snaps right back, leaving you with a loss. It's a classic trader's nightmare, right? Well, today we're going to pull back the curtain on this exact problem. We're going to figure out how to tell the difference between a real market shift and a super convincing fake out, also known as a liquidity sweep. I mean, seriously, we've all been there. It looks like it's straight out of a trading textbook, right? The market breaks a key level, you enter the trade feeling pretty good about it, and then, bam, the price just whipsaws back in the other direction. And you're left just staring at your screen thinking, what? What just happened? It's so common, and honestly, it's one of the most frustrating things in trading. So that feeling of getting trapped, it almost always comes down to one thing, one crucial distinction. The problem is, on the surface, a real market structure shift, that genuine reversal, and a sneaky liquidity sweep, the fake out, they can look almost identical. But here's the deal. Learning to spot those tiny, subtle differences, that's the key. That's how you start to dodge those painful losses and actually find those really great, high-probability trades. Okay, so if we're going to master this, we need to get super clear on what these two things actually are. Let's break it down and define the real deal versus the fake out. So first up, let's talk about the market structure shift. This is the classic reversal pattern, the one we're all taught to look for in the books. The easiest way to think about it is like a staircase. An uptrend is just a series of ascending steps, right? You've got your higher highs and your higher lows. Well, a market structure shift is when that staircase suddenly breaks. You get a really definitive move to a lower low, and that is a huge signal that the whole trend might be about to change direction. And then we have its tricky cousin, the liquidity sweep. The thing is, it looks just like a shift. It breaks that previous low, and all the reversal alarms in your head start going off. But here's the trick. Its real purpose isn't to start a brand new trend. Nope. It's more like a calculated raid. It's just dipping down far enough to grab a big pool of orders, that's the liquidity, before it snaps back violently in the original direction. And in the process, it traps everybody who fell for the fake out. So the big question is, how do we avoid the trap? Well, the secret, and this is really important, it isn't about staring at the break itself. It's about looking at the context all around it. We have to become like market map readers, reading the entire chart. And to do that, we have 3 key clues that we need to be looking for. Okay, so clue number 1 is liquidity. The simplest way to think about this is that it's the fuel for the market. It's the money. Just imagine below every important low and above every important high, there are these big pockets of orders just sitting there. We're talking stop losses, entry orders, the whole shebang. And these pools of money, they act like powerful magnets, pulling the price towards them. All right, next up, demand and supply zones. What are these? Well, they're just specific areas on your chart where, in the past, a huge, aggressive move started. A demand zone is where a ton of buying pressure came in. And a supply zone, you guessed it, that's where sellers really took control. You can think of them as the market's memory. It remembers these important price points where the big players stepped in. And our final clue is something called an imbalance. So when the market just rockets in one direction with a ton of force, it can actually leave behind a gap in the price action. It's like an area that was traded really inefficiently. This creates a kind of vacuum, some unfinished business that the market often feels a strong pull to go back to and, fill in. Yeah, honestly, the best way to think about an imbalance is just as a giant magnet sitting on your chart. When you see one, you know there's a powerful gravitational pull on the price, giving it a really compelling reason to trade back to that specific spot. Okay, theory is great, but let's put these clues to work in a real-world scenario. So imagine this. The market is in a nice, clear uptrend, but then, all of a sudden, it breaks below a recent low. So how do we figure out if this is a real reversal or if it's just a trap? All right, let's walk through this step by step. First up, we look at the location. Is this break happening near a really strong historical demand zone? In this case, nope. It's kind of happening in a weak, insignificant area. Okay, step 2, we look for those magnets. Are there any imbalances or maybe a stronger demand zone below where we are now? And yeah, there is. we can see a clear imbalance and a much beefier demand zone sitting just underneath. So what does that tell us? It tells us the market has a much bigger reason to keep going lower, to fill that imbalance and test that stronger zone. So our hypothesis? This is probably not a real shift. It's way more likely to be a sweep, just a quick dip down to refuel at a better price before the uptrend continues. Now, this same exact logic is super powerful when you're looking at a market that's just moving sideways, in a range. These kinds of fakeouts happen all the time in ranges, and if you can learn to spot them, man, it can open up some really fantastic trading opportunities. So let's walk through the game plan. First, our big picture context, our bias, is telling us the market probably wants to go lower to find that strong buying area we talked about. But then what do we see? Price breaks above the sideways range. To most people, that's going to look super bullish. But we're smarter than that. We check the location. Is this breakout coming from a strong, significant level? No, it's basically happening in no man's land. That's a huge red flag that this is probably a liquidity sweep designed to trap all those eager buyers. Now, the key here is patience. You absolutely do not act on that initial break. You wait for confirmation. And what's confirmation? It's seeing the price fail and break back down into the range. Once that happens, you know the trap has been sprung. And that's when you can start looking for a chance to sell, with your target being the low end of that range. See, the real power here comes from turning all this into a simple, repeatable process. It's about changing the very lens you use to look at every single market structure break. So to make that a little easier, let's put it all together in a simple checklist. Okay, think of this table as your new cheat sheet. It basically boils down our whole analysis into 3 key questions. First, location. Is the break happening at a strong demand or supply zone? If yes, it's probably a real shift. If it's out in the middle of nowhere, you should be suspicious. Second, context. Are there any big magnets like an imbalance left behind? If yes, the market probably wants to go there, which means the current break is just a sweep. And finally, the result. Does a whole new sustained trend kick off, or does the price just quickly snap back? If you ask yourself these 3 questions every time, you will get so much better at reading what the market is really trying to do. Look, if you take only one single thing away from this entire explainer, please let it be this. A break of structure all by itself is pretty much meaningless. You have to zoom out and read the whole map. The location, those liquidity magnets, the bigger story the chart is telling you, that is where you find your edge. Context is everything. So from now on, the next time you see the price break a key level, you're going to have this new lens to look through. You'll stop and ask yourself, is this a genuine reversal, or is it just a raid on liquidity? Is this a trap that's giving the crowd an exit and maybe, just maybe, giving me an entry? Think about that. Thanks for watching.